Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of natural gas in TradingView. And so I wanted to go over this initially before looking at the ETFs, just because I think it'll give us a better idea of levels, a better idea of direction. But before I do that, I first want to go over the natural gas futures data that I was hoping would be really useful for the month of December. But I misunderstood this table, and I don't think it's going to be that helpful, unfortunately. And so I had assumed that because it's historical data, it would not be changing. But the thing that I noticed is for December, the last video that I had made, this number was red. And I noticed this morning that it was green. I was puzzled by that. And then I realized all of these months, they're not changing because November's in the past, October's in the past, and whatnot. But December, that's current. And so that is changing as time goes on. I didn't realize that. I thought it was historical data, not current data. So that's a little, disappointing. It was I think a nice idea, but ultimately it was a dumb idea that I had. But that that's why it's degenerative education. Some of it's going to be, bad ideas. Hopefully some of it's useful though. But yeah, rather than wasting more time thinking about futures, which is what I did all day today, let's look at some charts because I think we'll be able to get some useful information from those. And so first starting with natural gas here, I put up these levels that I'll go over briefly here. So there's this one that's based on the high from March 3rd, and that happens to coincide with the 382 level of this Fibonacci retracement. So I think it's pretty cool that those coincide together. There's also this touch point of that level on August 9th. But where the price is at right now, I don't think that level is going to be too significant. However, if the price does turn around, I do think it will be notable resistance because it did recently act as resistance over here. And so these Fibonacci levels are based on the low of April 14th and the high of October 31st. And so the next level below this that we see is at the 50% level. And that was recently acted as support for one day on November 27th. Seemed like there was going to be a bounce there. But then the following day, November 28th, candle broke through. And now we're trading below it. And then so there's also this blue line here that's based on the high of May 19th. And unfortunately, if you can see this red dashed line there, the close of Friday, December 1st, was slightly below that level by about a little less than 2 cents. And so that's unfortunate. And, I was thinking maybe this line could be lower, especially seeing all of these wicks here that aren't touching that blue line. Perhaps it could be lowered, but I think it's better to be conservative and assume that starting next week, the price is starting below support. It's possible it will go above that support and reclaim it. We'll have to wait and see. But I think it's better to assume the worst case scenario, which is that it's going to go down further. And so the next level on this retracement is the 618, and that would be going down by about 3.43%. So that is something to consider when thinking about UNG and then doubling that for BOIL because BOIL is 2x leveraged, whereas cold, KOLD, is 2x leveraged short. So it would be, kind of opposite of that. Anyways, this level does coincide with a lot of sideways consolidation here, spanning about 4 months. So I do feel like that level will be a tough one to break below. Hopefully that doesn't happen. Hopefully we don't have much lower to go. Hopefully we're at support. But, in planning for the worst case scenario or the next worst case scenario, I think that's a level that will be important. The next level down, there is not as much consolidation there. It spans about 3 months rather than about 4 over here. So I feel like that's less likely to be tested because we have to break through all of this consolidation to get there. So hopefully we're pretty close to the bottom, but we're going to have to wait and see. And so now I'm going to switch over to looking at the ETFs, beginning with UNG because this one's not leveraged. I think it's going to be most representative of what's going on with natural gas here. And so the reason why I didn't do that same Fibonacci retracement is because with these ETFs, they're actually hitting new lows, all-time lows. So there aren't levels to compare to that are below like there are with natural gas. Again, another reason why I think looking at this is very useful. Okay, and so some of these Fibonacci retracements that I have drawn up here, this idea was based on a suggestion from a subscriber, so thank you for suggesting that. And so first I'm going to look at UNG and then I'll look over at Boyle. And so these two levels here, you can see where they're drawn from. I'm not going to go over the specific points just because I don't want this video to be too long, but this yellow line coincides with $5.41 to that retracement level. I've omitted all the other ones just so it's not cluttered. And so that level is below where the closing price of Friday was. So that's a good sign. However, this orange one is 1 cent above the closing price. So that's not really that great of a sign. But, in thinking about the possibility of natural gas dropping more to that next Fibonacci level, that is, right here, that 3.43% drop, an approximate drop of that, like that, is going to be 3.49%, going down to about $5.26. So I have that level marked here as well as an alert for myself. Hopefully that alert never goes off, but if it does, that will tell me, that I need to, reassess my analysis on natural gas. And so I'll probably be doing more frequent videos next week, whether or not that level's hit, seeing what the price action's like. And so with Boyle, I have similar two levels drawn here based on this yellow retracement and the orange one. And unfortunately, with Boyle, the closing price is below both of those levels. So it does seem likely that there will be some downside with this. And if it were to reclaim that support, that Fibonacci level, going down about 3.43% times 2, that would be about a 6.87% drop, going to about $32.96. And so of all of this stuff that I'm talking about, the only one that I personally have a position in is Boyle, which I realized was kind of stupid. I should have gone non-leveraged first, waited for a bottom, and then gotten into something leveraged. Or, I should have just watched and waited. I did think a bottom would be around the 29th or 30th, and, I should have just waited for that. I was impatient. That was bad. But anyways, with about a 7% drop ahead, for me, I'm just hanging out. I'm not doing anything because, I'm just going to wait to see if 32.96 is hit. If it is, I might, scoop up a few more shares. But if it does go lower than that and it doesn't look to be holding that level, I might, sell at a loss, which would suck. But, better to be safe than sorry. However, on that note, I do feel like there's a lot of bearish sentiment. I'm feeling like I'm doubting myself and my analysis a lot over this weekend. And so, in my experience in the past, that's usually where bottoms are, when I just completely doubt myself. So, I'm going to wait before I do anything until 32.96 is hit, and then I'll reassess then. And then also, I just want to go over KOLD briefly. I noticed something that makes me feel a little bit better about this, is that the current price is getting into an area where there were a number of other peaks where I have this blue shaded region drawn. And so my thoughts are that, it might be getting to a top, which would be good for natural gas, good for oil, good for UNG. But, if it does continue up higher to this all-time high, or not all-time high, but this recent high of $92.35, that would represent about an 11% move to the upside. And so I could, hedge by getting some KOLD, but, I kind of have the thoughts that this is near the top, but that is also kind of my bias. So, I'm just gonna have to wait and see. Maybe it might be smart to pick up a couple shares of KOLD if oil does go lower. But I do feel like there's a lot of resistance up here with these tops. So it's tough to say. Oh, and I guess I should note, I didn't mention this before, the RSI and also volume. So the RSI does look like it's overbought with KOLD. However, it has been in the past, and following that, it's continued up a lot. So I don't really think that's the best indicator. Looking at oil, also oversold, conversely oversold, but it's been oversold in the past and followed by going down. So again, not that useful. UNG also oversold, still went down. And then if we look at natural gas again, in order to do that, I'm actually going to remove myself. We can see that volume has been decreasing. And so if volume's decreasing, that means, there are going to be fewer sellers. And so maybe we're getting near a bottom. But, who knows? And so, those are my thoughts. Hopefully they're helpful. If you did enjoy this video, make sure you like it. Share your thoughts in the comments below. It's been so nice exchanging with you all in the comments, and I appreciate all of the ideas that you've shared. I'm glad to share those in these videos. So thanks a lot for the comments. Please make sure you subscribe, and thanks a lot for watching.